right? Now, the forex market opens on Sunday evening or Sunday night rather, around 10 p.m. and the session that's open then is the Sydney session. The Sydney is in Australia, all right. Sydney session, that is the session that gets opened. Then by 12 a.m. We have the Tokyo session open, and the Tokyo session closes by 9 a.m. our time. Sydney session closes by 7 a.m. our time. Now, London session, right, starts by when 8 o'clock, 8 a.m. and closes by 5 p.m. Whereas New York session starts by 1 p.m. and closes by by 10. So that's how the whole cycle happens. Sydney session starts by 10 p.m. closes by 7 a.m. Tokyo session starts by 12 a.m. closes by 9 a.m. Our time. Then London session starts by 8 a.m. our time and closes by 5 p.m. There's New York session starts by 1 p.m. and closes by 10 p.m. Now, what is the application of what are the applications of these sessions now in the chart? Why is it that you can't just come to the chart and place trades at any time? Just wake up in the night and just place trades? No, you see, that's not how it works. You can see in this picture, the light green one is showing less volume, and the darker green or the deeper green is showing more volume. And what do you want to do in the market? What do you want to do? You want to trade when there is the most volume, there is more liquidity, there's the most liquidity, there's the most volatility. That's where you really get interested in the market. If you go back to your charts, you could go back to your chart and check. Let's just use the 15 minutes time frame. If you check the movement of the chart around the Asian session, let's say around here, the movement of the and this is currently 2 p.m. So let's just go back to like 5 p.m. Okay, let's go back to 5 p.m. Yes. Okay, yesterday was even a volatile day, but you can see there's some sessions, especially the Asian session. Let me look for another one. Okay, this is active sessions. These are active sessions. Okay, good. You can see down this whole range here. Okay, let's get to this. This whole range is the Asian session. You can see that price liquidity or volatility is kind of very low. Just market was just ranging small candlesticks. And when did you start seeing the big candlesticks and big momentum? When the London session was opened, you can see more moves. So that's what this picture here is trying to explain. Sessions are really important in the market because you just want to get involved when there is high volatility, right? There's high volatility. I wanted explaining sessions to you guys first before diving into time and price, right? But I believe you understand what sessions are and what's the most the session we should trade the most. The session we should trade the most now is the New York session and the London session. Most especially their overlap. Sometimes London sessions might not move, but when New York session and London session overlaps, that means London session active trading time is synchronizing with New York session active trading time. So you tend to be more volatility in the market, and this is when majority of the moves in the market happen. Big moves in the market happen. This is like the most volatile time in the market. So we should be looking at moves from like 1 p.m., 2 p.m., 3 p.m. like that over time to expect big moves in the market, right? And that's good. So let's get to the chart and let me explain what price timing is. Price and timing. Now, as we all know, the candlesticks moves measures its time. So like in the 15 minutes time frame, it just simply means that each candlestick is forms in 15 minutes, right? Each candlestick forms in 15 minutes. If it's 1 hour, each candlestick forms in 1 hour, and we already know sessions, right? Now, why we are talking about time and price now is because of number one, our entry and the management of our trade, when we should really get involved. After plotting out your areas, your demand area, your daily level, plot out your fib, use your volume profile, and you have an area. Does it mean you just dive into that market at any time, even if the timing is wrong, or even if the timing is in an odd hour? No, that doesn't mean. Every time you see price reaction in our area, we should always be wanting to see price reaction in our area during active sessions in the sense that we're seeing price reaction around times of like maybe London session by 8 a.m, 9 a.m, or by New York session by 1 p.m, 2 p.m, 3 p.m, because we're expecting moves from there. But there's no point of entering a chart or an opportunity around odd hours like 2 a.m, 3 a.m for pairs like Euro USD, right? For pairs like Euro USD, if you enter a pair like if you enter a long position by on Euro USD by 2 a.m, best believe markets will clear out your order by London session open before it actually moves. You can imagine this is okay, let's just look for Asian move. You just see people that joined in with this buy here around Asian session. There are people that joined in this buy because a lot of people trade. So a lot of people might have been trading and having buys here. Now, you see what market did, or even let's just talk about people that were selling. You were selling around Asian session. Okay, market pulled back and sold for about 50 pips. Now by London session, it kept on selling by London, but you see by New York session, you can see the blast through. New York session really cleared all the highs, cleared all the liquidity above, and just that day ended in a very bullish sense. So now, why I mentioned, or why I'm teaching this time and price, is just to give you an idea of the correct at the proper time to enter a trade. Like for example, for gold, there is no cause or there is no reason why you should be entering any gold trade by 2 a.m, 3 a.m. There is no reason. You should be actively involved in gold around new session like 1 a.m, 1 p.m, 2 p.m, 3 p.m. That is when you should be actively involved in gold, because that's when it's going to move. Or London session sometimes by like 10 p.m, 9 a.m, like by like 10 a.m, 9 a.m, and so, right? These are price timings, and it's going to really help you avoid lots of mistake in the market. Now this is for Euro USD, the active session. So you can take this down, you can write this down. The active sessions for Euro USD is the London session and the New York session. And most times, the most entries, or the times you should be looking for the best entries, is during the New York session and the London session overlap, which is around 1 p.m. and 2 p.m. right? For pound Aussie, you see pound Aussie now is a currency pair that pound Aussie is a currency pair that has AUD, which has Sydney session, and GBP. That means pound Aussie can actually move in the Sydney session around like odd hours like 2 a.m, 3 a.m, 4 a.m. I told you guys I trade this pair a lot of time. I trade this pair very well. So sometimes when I trade pound Aussie, I sleep and wake up before London session. I'm done for the day. Like the move, there's just like my whole move just happens. The whole move just happens while I am asleep. And it happens during Sydney session, right? I like it personally. I do like it because it just makes me like, okay, wake up to money, wake up to profit, this kind of thing, and don't even really have to bother about the London session and New York session, right? But it moves during London session as well, it moves during New York session, and also moves during the Sydney session. So you can actually enter a trade position in pound Aussie by the Sydney session, like around 3 a.m. to 2 a.m., 4 a.m., right? And expect a movement, right? Let's know whether we can find examples. There are lots of examples in pound Aussie. Okay, and there are lots of examples in pound Aussie. Let me just use this current price action that just happened. Okay, market, this is what happened now. As market opened by 10 p.m., this is what happened. Bracket just spiked up, engulfed, and kept on moving. By Sydney session, just even before London session, market has already moved about 132 pips. Imagine having 132 pips worth of move by just midnight. From 10 p.m. to what? To, I think the move stopped by 7. So that is how volatile pound Aussie can be in the night, right? Just imagine you had a short position here. Someone that had the short position, definitely people had short position here. But just imagine you had the short position here before London session opened. Your whole position is already closed. You can see that even London session, it didn't even give the exact move or the exact volume at which its Asian session traded, or the Sydney session traded around times of 10 p.m., 11 p.m., 12 a.m., 1 a.m., 2 a.m., 3 a.m., right? That is the active session. So that's how you should really understand price timing. Price timing is very important because it tells you the exact time to really get involved in a certain market, right? To really get involved in a certain market. In gold, I shouldn't be looking for anything in gold around midnight. Rather, I should be looking for opportunities around during the day, like around 1 a.m. and 1 p.m., 2 p.m., or even by London session, like 8 a.m., 9 a.m., right? Lots of mistakes have been made in the past when I entered at the wrong time. Then when market just comes to the active session, my orders just get wiped out, and it's just like I don't even have any trade opportunities again. I don't even know the right time to trade. So this is a very, very, very important aspect in also trading this strategy that I'm actually explaining. So proper involvement, right? Proper involvement in the market, right? Proper involvement in the market at the proper time is just what I am trying to explain. Remember, Euro USD is London session and New York session. Pound Aussie, New York session, London session, and Sydney session. And what gold is basically London and New York, most especially New York session. So you should be looking for opportunities. You should be looking to trade these opportunities or these trades, these instruments rather, around this time, right? Around this time. So that's what I mean. I'll see you guys in the next one.